On the program today, Egypt transfers huge gas pipelines to the western desert. Kenya Airways and Astro Aviation in Africa signed code-share agreement to boost trade between Africa and the Middle East. Plus, Nigeria's President Muhammadu Buhari officially inaugurates Ministry of Finance Incorporated Board, targets 100 trillion naira asset growth. Hello and welcome to Business Incorporated. I'm Will Ibang. As always, let's check in on the markets, starting with Africa, where we saw mostly positive sentiments with equities at intraday. The NGX was trading up 0.06%, while the JSE in South Africa climbed 0.6%. Elsewhere, Egypt's EGX30 rose by more than 0.5% at intraday, while the Nairobi Securities Exchange closed Tuesday's trading in the green. Now, we're going to check out what's happening with activities at the NGX with Azizat Awunuga, securities analyst with Barchin Securities Limited. She's going to be sharing with us what's driving intraday activities right there. Good afternoon, Azizat. It's good to have you on the program. Can you unmute your audio, Azizat? Could you unmute? Could you unmute your mic, please? Okay, so over to the Middle East. While we are waiting for Azizat, we saw sentiments in the Middle East were mixed. At intraday, Abu Dhabi index was up 0.46%. Dubai was climbed very strongly, 1.58%, and still within the region, we see Saudi Arabia down 0.21%, and Qatari index also down 0.38%. Now, in the EU, we're seeing on the world over, in the world already being ravaged by global warming. Germany has decided to phase out hard coal-fired power stations because of their hugely detrimental climate impact. However, the war in Ukraine and soaring prices for gas forced policymakers to U-turn and have these power plants restarted last spring. Now, the Federal Network Agency, as the regulator says, the country could indeed phase out coal earlier as the power supply would still be secured. Let's get more from Chris Kober in Berlin. Chris, how does the agency come to this assessment?
It looked at the current energy mix in Germany, with 54% of the country's power stemming from conventional sources like coal, gas, or nuclear, and 46% stemming from renewables like wind, solar, or hydropower. And on top of that, the agency considered developments that can be expected for the market and the grid, and after which it came to the conclusion that Germany could bring forward its planned coal phase-out by 8 years to 2030. According to the report, which is being discussed today in federal cabinet, the country's electricity supply is secured for the period of 2025 to 2031, despite rising power consumption due to heat pumps, electric mobility, and electrolyzers. Now, that calculation takes into account a complete coal phase out by 2030, the report said, highlighting that even without coal power, there'd be a very high level of energy security, even by European standards. However, the report is also stressing that its aim is not to analyze crisis scenarios, and after all, it is quite a crisis scenario that Germany has been seeing itself in, with Russian gas deliveries cut and prices soaring in the past months. So these things could get in the way of an earlier phase out of coal.
Oh, but why is this such a touchy issue in Germany?
For several reasons. Because Germany is an industrialized country and it needs a lot of energy, and industry lobby groups have been stressing that a shortage of power caused by whatever reason would lead to problems in production and would be a threat to jobs. Also, after years of cheap gas deliveries from Russia, which not only industrial businesses took advantage of, consumers have also gotten used to energy costs being relatively low. Soaring gas prices amid Russia's war in Ukraine and its fallout have been a tremendous shock and a financial burden to many households. So energy security has been a huge issue for political leaders, which, as we mentioned, forced them to change course and reactivate a number of coal power plants and extend the lifetime of a number of nuclear power plants remaining in the country. That, again, has caused quite some pain for the Greens, which are part of the three-party coalition government in Berlin, because they have been lobbying for an earlier phase-out of coal, earlier than 2038, which Germany agreed on a couple of years ago. Now, with the Greens leading the way in Berlin, the government there has agreed to phase out mining for lignite for power generation by 2030 in the mines of the Western Rhine region. However, such a target has not been set for the lignite mines in the country's east. And with the question of energy security and energy prices on the minds of so many people, agreement to such a step isn't really widespread, particularly as the burning of coal actually increased in the third quarter last year amid Germany's energy woes.
We don't know how long it will take to reach the zero emission with energy crisis still, very much in the picture here. So what are investors on the financial markets looking at today?
They're looking towards Washington, where the Federal Reserve kicked off a two-day policy meeting on Tuesday, which is expected to culminate in a quarter-point interest rate hike. A quarter-point increase in February would mark a further step down after December's half-point hike. Markets will focus on Fed Chair Jerome Powell's press conference after the central bankers' meeting, watching for signals how much further the Fed thinks it has to go in order to lower prices. In general, investors are assuming the end of rate hikes is in sight. Solid to very strong corporate earnings in the U.S. have also been bolstering the mood somewhat, along with the fact that the Eurozone economy showed greater resilience than expected in the final months of 2022, notching weak but positive growth of 0.1%. Nevertheless, investors in Germany remain cautious this morning with the Fed meeting in sight and the European Central Bank, as well as the Bank of England, announcing their decision on interest rate hikes tomorrow. The DAX pretty much unchanged. Germany's blue chips index hovering around 15,100 points in the early parts of today's trading session.
Thanks so much, Chris, for the updates. Chris in Berlin for always coming on the program and giving us your insights. Now we'll move over. Still speaking of markets, we'll circle back to Azizat Awuniga. She's going to tell us what's happening on the NGX, what's driving sentiments for traders and investors at the moment. Azizat, can you hear me?
Yes, I can, Will. Good afternoon.
Good afternoon. Azizat, we've seen the NGX still in positive territory at intraday. What's driving this? Give us a quick look, and the markets close positive or negative?
Most likely, we're going to see the market close in the positive. So what we're seeing is heavy positive reactions to any releases being made by some companies. Also, we saw MTN with their dividend announcement really, rally up investors' sentiment in the market. Also, we see investor play towards anticipation of positive results on some companies such as Seplat. Seplat did about 10% at midday, moving the price up from 1,001 yesterday to about 1,210 at midday today. Also, what we're seeing is a positive sentiment in some mid-cap stocks. I know as companies such as May and Baker did really well in their results that currently were released, their Q4 results as well as FY for some companies. So most likely we're going to see this sentiment continue till the end of the trading day, and the market will most likely close in positive.
Thank you so much, Azizat Awuniga, securities analyst, Party and Securities, for sharing your thoughts with us. We'll look out for that positive close.
Thank you, Will.
Now, the UK may not escape a contraction as the IMF, International Monetary Fund, forecast GDP will shrink by 0.6% this year, a downgrade of almost 1%. And we need to remember that the IMF has revised up its forecast for global growth this year. Our Juliana Olainka is in London with more insights. Juliana, good afternoon. IMF released updated global growth rate, and the UK appears to be the only developed country in the negative. How is this projection being digested in the country, seeing all that is going on already?
Good afternoon, Will. Well, it's not great. Of course, we know that the International Monetary Fund is the world's most influential economic institution. And over the weekend, they released their World Economic Outlook. And as you said, they've upgraded the forecast for global growth this year to about 2.9%. But the United Kingdom has been separated as some sort of outlier. Not only are we the only economy within the group of G7, the world's most advanced nations, not to have recovered back to its pre-pandemic size, we're also going to see the least amount of growth this year. In fact, it's going to be negative growth. I believe they've said that we're likely to contract by 0.6%. So it's not great, of course. If you look at it as mere headlines, it's just another doom and gloom headline. But the reality has been hitting Britons for very many months. The fact that we've got 500,000 people downing tools today because of jobs, pay, conditions, frustration with overall working conditions is pretty clear. We've got sky high bills that don't appear to be going anywhere. And, you know, the IMF did try to explain why this is happening, particularly to the UK. And they have pointed towards the labour market, which we know we've got record high vacancies in the UK at the moment. So it is a good time to get a job in the UK. Are you going to be able to be paid enough to put food on the table and pay your bills? Probably not, which is why we're seeing nurses having to go to food banks every week to try and get some food in their tummies. So overall, it's not great. We are going to hear from the Monetary Policy Committee at the Bank of England tomorrow. They're going to be setting interest rates. Interest rates in this country are currently at 3.5%. Economists have forecast a 0.5% hike in interest rates. This is to try and combat inflation. But then again, we've got 750,000 mortgage holders on the brink of defaulting on their mortgage payments because they've risen significantly because the cost of borrowing is so high. So not great. We did have a response from the Chancellor, Jeremy Hunt. He says, look, you know, you can always get data that is for or against whatever argument you're putting out. That, you know, last year the UK became the $3 trillion tech economy. We're not talking about that and other aspects. But, you know, the fact that we've got 500,000 people, you know, demanding for more pay on the streets is just not great. More headache for Prime Minister Rishi Sunak as he marks his 100th day in office this week.
Oh, Juliana, I can see you talking to me from home. That means you can't get to work. Probably more strikes on the rail, transport. How's that going to affect? That's probably going to affect the economy more. It's not probably, it's going to affect the economy more and more. And more woes. Coming to that, UK manufacturing contracts for the 6 months in a row, Juliana. So how's that going to, you know, fill in with all the mix, this bag of, you know, pain that's going on now?
Here again, Will, you know, we're kind of doubling down, aren't we, on the gloomy outlook released this weekend from the International Monetary Fund. All indicators suggest that what they're saying is correct. Again, we've had some PMI data having a forensic look at the manufacturing sector in the UK, which contributes about 10% to the economy. So not as significant as the services sector, which contributes to about 80%, but still, nevertheless, it employs a lot of people and contributes to our domestic growth. Now, you're right, there was a sixth consecutive fall. So I believe it's still below 50, but there does appear to be a smidgen of hope because it's increased slightly. So it was 45.3 in December. It's gone up to about 47 in January. Anything below 50 represents a contraction. So it has contracted, but we are much better than where we were in December, which was at an 18-month low. Again, if you talk to those who contribute to the survey, they're talking about, you know, the skyrocketing high gas prices, the global slowdown anyway, a lack of want and need for products, both domestically and internationally. So, you know, there's a long way to go for a full recovery. But as I was saying, a glimmer, a simmer of hope, because January's numbers were far greater than what we recorded in December.
We do hope that, you know, translate into better living standards for people, better conditions, because right now a lot of people are struggling, as you mentioned. Nurses going to, get food from, it's quite sad at the moment, Juliana. But how are markets really reacting to all this? Are they trading better at intraday, or they're just a glum picture?
Not bad, actually. The UK blue chip index is in a high. Earlier this week, the Prime Minister, Rishi Sunak, did outline a £1 billion plan to tackle some of the crucial, urgent issues that need to be addressed in the NHS. I think that's cheered investors. Also, as well, waiting with a bated breath for that MPC decision tomorrow. And then, of course, today we got that Eurozone inflation data showing that, inflation has slightly fallen there. Could be a good sign for the rest of its neighbours. So the FTSE All Share at intraday, is up. It's up by 0.23%. FTSE 100 up by 0.12%. And the FTSE 250, that domestic market, that's up by 0.72%. In the currencies market, the British pound is currently trading up against the US dollar by 0.07%. So £1 will get you $1.23 at the moment, but the British pound is fallen against the euro and the Japanese yen at intraday, Will.
Not bad, Juliana. Not bad for intraday trading. Thanks so much, Juliana, for joining us.
Thank you.
And after the break, more stories from the African continent. Do stay with us. This is Business Incorporated. Now we're just going to take a look into the U.S. markets to see how stock futures fared, with futures slipping today as investors looked ahead to the Federal Reserve's Wednesday meeting. Futures tied to the Dow Jones Industrial Average shed 0.44%. S&P 500 futures and NASDAQ Composite futures were down 0.41% and 0.34% respectively. The moves comes after stocks jumped to end January on a strong note. Now let's take a look at yesterday's trading close with our Channels TV correspondent, Maria Bird.
The U.S. stock market ended the month of January, the first month of 2023, in the green, as the Dow Jones was up by 1.1%, the S&P 500 up by 1.5%, and the heavy-tech NASDAQ was up by 1.7%. It is clear that many investors are watching and hopeful that this is a good sign for the rest of 2023, as the Dow Jones ended almost 3% up for the month, and the NASDAQ was over 10% increase over the month. And the S&P 500 ended at over 6% gains for the month. These gains are showing a strong potential for 2023. Investors also believe this could be a good sign as the Federal Reserve had a two-day meeting, and they are hopeful that Wednesday's reports will release that there will not be major interest rate hikes. This could mean that inflation is slowing in the U.S. economy.
Thanks so much, Maria. Now, Kenya's central bank, in its first monetary policy committee meeting in 2023, has decided to keep its benchmark interest rate unchanged for the first time since July. Now, joining more than a third of global central banks in pausing their tightening campaigns as inflation shows signs of cooling and economies slow down. Mercy Milanoy, business reporter in Kenya, joins me to discuss how this decision is being perceived by Kenyans and the impact in the country in general. Good afternoon, Mercy Milanoy. It's good to have you on the program.
Good afternoon. Thank you so much for having me.
A quick one. Did the move by the central bank to hold rates come as a surprise?
Well, not really. And of course, for the many Kenyans, expectations was that probably the lending rate would have gone down. But for the Kenyans, at the new administration, they've been very intentional about lending rate, at least trying to maintain the current living standard and of course the cost of living. And of course, we were really waiting for the Central Bank of Kenya to give a go-ahead, especially to the financial institutions. But of course, now they have maintained the lending rate. So we're just waiting to see the response that we'll have from the banks. But of course, for many Kenyans, the one prayer is that the cost of living will go down, especially the cost of lending.
Okay, so we've seen inflation easing in the country. It's currently down to 9% in January from 9.6% in October. What would you say drove this? What's responsible for the slowdown?
Well, we've been having a bit of rains, and one of the things that actually really affect inflation in Kenya, number one is the cost of food, the cost of fuel, the cost of housing, and of course of especially food. And when we have drought, of course the cost of the inflation goes up because there's lack of food, there's no much production of food going on, and what that leads is to increase the cost of basic commodities, your food. So we've been having a bit of rains from the month of November, December, and of course even we have seen a bit of revisions in cost of food. So the small part, as long as the cost of food is catered for and it's affordable, then we're able to maintain inflation. And the rains at least are giving a bit of a promise in terms of increasing food production for the months to come. So as long as the cost of food is maintained, then of course inflation can be maintained. But if you look at the price difference, the percentage difference of inflation is less than 1%, meaning still Kenyans are really incurring a very big cost in terms of even fuel. Our fuel is still expensive. And of course, and once fuel is expensive, it means that mode of transportation is high. And of course, it contributes to housing and all other amenities, and also electricity. Like right now, the Kenya electricity company announced that the price of electricity will go up by almost 115%. So of course, the inflation has gone down, but not significantly. It's just less than 10%, but things are expected more.
Okay, so the people are not really feeling the impacts as much as they should at the moment. So thank you so much, Mercy Milanoy, business reporter in Kenya. Thank you for sharing this insight, and we hope to see the impact trickle down to the masses. Now, still in Kenya, Kenya Airways Cargo Unit, KQ Cargo, and Astral Aviation, two leading cargo operators on the African continent, have signed a code-share agreement. The agreement, which is the first in Africa, is expected to boost trade and commodity movement from the Middle East into Africa by leveraging the strengths of the two cargo operators in the Nairobi cargo hub at Jomo Kenyatta International Airport. Now, the Adabia port of the Suez Canal Economic Zone in Egypt has announced it's transferred 3 gas distillation towers belonging to an oil company to the Western Desert Gas Complex to increase its capacity. The towers were manufactured locally for the first time in the central workshops of the Egyptian Petrojet Company and were loaded and transported by the National Transport and Overseas Services Company. Now, the towers will be used to increase the capacity of the 4th production line at the Western Desert Gas Complex from a capacity of 600 million cubic feet per day to 1,500 million cubic feet per day. Now, the Nigerian president has officially launched the Ministry of Finance Incorporated, MOFI, which was originally set up in 1959 through an act of parliament as a custodian of the federal government's investments in various government-linked companies and government-owned enterprises. At the inauguration of the Governing Council Board of Directors and an executive management team of the Ministry of Finance Incorporated at the Council chambers, President Muhammadu Buhari challenged the new Governing Council and the board to raise the value of the company's portfolio from the current 18 trillion naira to 100 trillion naira by 2033. He also urged the new leadership to take steps to mobilize capital and invest same in assets that are critical to the federal government's revenue drive to primarily convert the nation's current assets into cash flow generating entities. And that's it on Business Incorporated. I'm Will Ibong. Thanks for watching. See you tomorrow.